Indian Union Budget 2026 will shortly be presented by the Honorable FM, and given the current uncertain economic and trade environment, corporate India would have high expectations for a growth-oriented budget. Here are my top 3 expectations of corporate India on the direct tax front. First, the decriminalisation of offences which are liable to prosecution. Currently, there are more than 35 such offences and even include certain petty offences like delay in deposit of TDS. The Niti Aayog has suggested to decriminalise half of such offences in its last paper on deregulation, and I hope this will find favour in the legislature as well. Next, to boost employment generation, the monetary threshold for employment-linked incentives could be reconsidered. Given the current cost of living index, the disqualifying threshold of wages should be increased from the current mere level of 25,000 rupees. Last but not the least, corporate India would also be expecting measures to boost domestic manufacturing and innovation. This could be done by incentivizing capex for new manufacturing and qualifying spends on R&D innovation through measures like accelerated depreciation and weighted deduction. Corporate India hopes that the Honorable FM will factor in some of these suggestions in the fine print of Budget 2026.